Ladies and gentlemen of the crypto space, we're live on a Friday, March 8th at 11:30 a.m. So we broke all-time high yet again. This is the second time for Bitcoin punching through the ceiling, and this is equally the second time where there was some ferocious sell pressure the second you punch through into all-time high territory. Absolutely fascinating. From a psychological perspective, fine. Very early entrants, Grayscale's Bitcoin Trust, GBTC, and folks getting 10, 20, 30x on the money, maybe pre 2019, even earlier cycle, and they're getting big multiples on their Bitcoin, and it's been locked up because there was a discount to NAV. And now that that premium has adjusted, or the premium, the discount has been alleviated, they can exit because it's an ETF now. In any case, that selling is a cost basis reset. Now, the market tells us what it's doing, meaning if the selling occurs on a breach of all-time high and then the purchases of those sold units are made, bringing us back to all-time high, it's basically an ascending triangle formation of higher lows, one, and two. The sold units are now have that reset cost basis at the higher price point, which means for them to be in profit, the price needs to go up way above all-time high. Now, rationality dictates the average market actor. On average, the market is rational. Not talking about meme coins and shit, but we're talking about the macro assets, so the larger market cap assets. So, what does rationality dictate? That you're going to sell when in profit and you're not going to sell when in loss. Right now, the market's behaving rationally. We know what happens when the market behaves irrationally, but we're on the verge of such a rational market where there's no reason to necessarily liquidate. At some point, that sell pressure will alleviate and it'll punch through to higher highs. There's almost no indication or no logical train of thought that indicates a reversal. For what reason? Where's the what directionality, or what would produce that kind of directionality? Doesn't make much sense. So the chart looks very interesting. Things take time to punch through ceilings of resistance for that cost basis reset to occur. You see the watch list. I have my eyes on things, and obviously with Bitcoin punching up and giving a nice fat dip to the downside, everything else is selling off. This is all the volatility that everyone's always talked about that are inherent in crypto markets, where sure, you have the 3, 4, 5, 6, 7, 10% swings in price point, but it doesn't mean much. That's the marginal actor, the actor that is irrational. It doesn't see the overall directionality of the market. And the directionality is clear from the larger market cap asset perspective that over time the price will appreciate. The supply does not meet the demand, and that's certainly the case with Ethereum. And demand is far exceeding supply, even for the inflationary Bitcoin. And it's going to get disinflated. There's going to be a supply crunch. And this is all like the narratives that we've heard over the years where we're leading up to the halving. And it's quite fascinating that we actually punched all-time high leading up to the halving. And we're looking towards the back end of 2024, maybe even early Q3, Q4 2024, as they finally get the DXY under control, as they finally start to print out of the treasury the base money of the planet, treasuries. And as that filters through the system, see what happens if we get the 1-2 interest rate cuts this year. That's probably more than enough, in my opinion, to really start a snowball of dollar printing internationally. And I look forward to seeing this directionality continue. Looking at the DXY, higher low, we are above moving averages on the ultra long-term time horizon, 3-month charts. On the monthly, we did push below the time weighted average price. If it decides to load, let's close the MA. There you go. There's the time weighted average price. And this is indicating of weakness. Lower highs, a lower high, and finding there was actually no real support from a monthly perspective. It pushed right through it, and there was resistance on the time weighted average price. So technically, this is one, two, three instances of resistance on the monthly time weighted average price, which is quite interesting. Directionality of this chart indicates further downward movement. As this chart goes down, global currency value, dollar denominated value increases. That increases foreign currency purchasing power. And then all you need is the other conditions to fall into place. 10.8 trill coming out of Treasury this year, and maybe quarter percent, 0.5% interest rate cut. Even if it's that shallow, that sets up the conditions for appreciating bond prices, Treasury prices, and then all of a sudden you got 10.8 trill that's appreciating. What do you do when your AVE health factor goes up? You go and leverage money. You borrow money. You use the credit because your collateral just went up in price. And that's exactly the same way the global financial system works. They print the money out of Treasury. When those units, when that money goes up in price, you can then borrow more money, especially with favorable interest rate terms. Interest rates they cut a quarter and a half, and the rest of the world is cutting. Interest rates going down, price of money going up, whole world starts to leverage. And it just so happens fiscal 24 is going to be the largest increase in global money supply basically in history. It's going to be more than 2020 because they have to refinance 2020. And they're going to deficit spend in 24. So it's going to be more than $10.8 trillion. Patience, patience, and focus on the business at hand because this is business. This isn't what everyone thinks crypto is. This is the biggest business on the planet because you're dealing with literally foreign exchange and credit. Clearly, there's the other businesses like DeepIn and Linux VM interaction or data availability. These are all big narratives, but they're going up against the cloud. Now they can do very well. Golem's doing very well. Aleph's doing very well, and these types of tech stacks, Cartesi's doing very well. All these tech stacks are big business, but they're going up against AWS, Azure, and the big cloud providers for decentralized. They're trying to decentralize the concept of compute, decentralize the concept of data availability, so on and so forth. And that's a good investment, but watch the time horizon. I think the time horizon for those types of investments are going to be longer than the time horizon associated with the concept of foreign exchange and credit. Foreign exchange and credit outperforming is merely a result of regulatory, interest rate, and geographic arbitrage. You could say geopolitical, but geographic. Depending on where you are, you get a favorable place to service your credit, to service what you want to do financially. So the crypto space is literally everywhere. It's a nation state unlike any other. It's accessible to all nation states. So it's the perfect interest rate, regulatory, and geopolitical destination for arbitrage. It's the perfect storm. And it's exactly what today's reference, our imagery, and our video reference is all about. It's literally the perfect storm. And I love to zoom out, and this is really like cycle one of folks starting to realize that. Um, 2020 and 2021 was people just playing and seeing if the systems did what they did. But now, at this point in 2024, everyone knows what the systems do. And it's all about just more and more people digesting what the systems do and how they work. And just the story that I've been telling over the last couple of years actually just playing out. And it's obvious. All the comparisons we've talked about, all the analogies we've talked about, it's getting more and more obvious. And who's to argue with the reality that foreign exchange and credit are the biggest businesses on the planet. So let's say you get 8% in Europe, 7% here, 6% there, and you're able to get 4% in crypto markets using a collateral that's potentially appreciating. Now, all of a sudden, you don't have just credit occurring endogenously in the crypto space just to gamble, to speculate on price appreciation, but you literally have credit that's being extended to businesses. Maybe in a country where there's underbanked and you can't get access, but somehow you got access to a certain amount of crypto collateral and you're able to borrow dollars rather than what the bank in the respective country wants to give you, because you can get dollars in the crypto markets. You can get Tether, which is very popular in the East, $100+ billion worth of Tether. So if you have a little bit of collateral, Ethereum, WBTC, you could easily borrow dollars and pay bills in a market where everyone expects that collateral to appreciate. Literally, it's the same exact thing as what the world has done with US treasuries for decades. Oh, you could get your hands on some collateral. All right, you could borrow some cash. Oh, and the collateral was appreciating. It just so happens that that's not the case for treasuries, I think, going forward. The secular trend for treasuries is certainly broken, which implies this is not the appreciating collateral anymore. It's cyclically depreciating in a secular trend. It's kind of what I indicate here. So my expectation is just an extension of the directionality of the chart, where you have maybe a dip, maybe something breaks, and you have what, a rally in treasuries down to like 2% and change, 2.5. All right, fine. And then bam, then you get your higher high, 6 and change. But look at the years. Let's take off the other drawing so I don't blow you guys' brains as I extend my train of thought. You get your higher lows, but look at the years on this time frame. You're out into 37. That's the biggest underestimation of understanding these markets. It's how many years can all of this insanity continue to play out? All right, fine. You get your dip in treasuries down into 2031, down to 3.5%. I'm just drawing a monthly chart, and you get to get a sense of these types of time frames that could potentially be in play. You know what happens when treasuries rally to 3.5%, and all of a sudden collateral prices go through the roof? Your RV health factor is going up, and people are borrowing cash. And when the world borrows cash, it's in the trillions of dollars. Except cyclically, they expect lower lows on their collateral prices. So all of a sudden, it may be the case that new desirable forms of collateral are happening. And this is a structural change to the entire system. For the last 40 something years, 41 years, bond prices went up in a secular trend. Cyclically, higher highs and higher lows on bond prices. So you could do certain things with that collateral. But now it seems to be the case that Bitcoin is doing that. Higher lows and higher highs on price points, when used as collateral, it serves the same use that collateral served for the last 41 years, but now it's something else. Now it's this. And I think we'll see other forms of collateral as well. And we'll never have an end to the age-old question of proof of work versus proof of stake. But the point is, higher lows, higher highs means you can borrow more cash, means the global currency supply expands, means prices go up. And that's the direction that the world is changing. Curve was at 84 cents. What's most interesting from a curve perspective, and I know it's we have talked about curve for years, and it's been salty when talked about by the general public, because they see this volatility from 6 and change down to 40 cents and all the social media narratives. But this is the heart of everything that's occurring. What was built, these immutable contracts, is probably the biggest thing in foreign exchange, and frankly, CRV USD credit. in the entire crypto space. Now, it might not be the frothiest. It might not be the most exuberant in price action. You got plenty of AMMs that do pretty interesting things. I mean, look at Arrow and Velo and these multiples that occur. Look at Ramses and whatever the variant is called on Phantom. But the solidly forks, they've done very, very well. Um, but that's foreign exchange, and those are in micro emerging markets. This is mainnet. This is by far, in my opinion, the biggest thing going on in crypto markets, consistent with my narrative of foreign exchange and credit being the most important thing in these markets that have the most imminent appreciation of systemic significance from a financial products and services perspective. And finally push through the monthly time weighted average price. Shit takes time. Higher low, higher low, the breakout, and check back in a month or two when you need a couple of candles. You get the retest, and then you get the higher high, and I don't expect, as I've said time and time again, the significant appreciation that everyone wants to expect with meme coins, thousands and thousands and thousands of percent. But that's the whole point of an investment. You know, you want something that grows and is infrastructure, so it's entrenched and has a moat. So you could do all your other degenerate shit, you know, with your meme coins and your abs and your doges and well, even doge isn't really going to be exuberant as it once was. But you could do all that degenerate shit, but that's not an investment. We're here for investing. We're the rational channel. And that's what folks have come to appreciate about this channel over the years. We made it through a very difficult time in 22. Even 23 was continuing to be bleak. And in 2024, folks didn't really know what was happening. They were still sidelined and they didn't want to believe it. It was still in very much disbelief. But the story that we've told over the years has been perfectly consistent. And we're heading in a direction where the money supply is going to increase. It's very consistent with the Bitcoin narrative, except I tell it from a different perspective, from a business ownership and an investment perspective, not necessarily from a money perspective. Sure, you could denominate your income from business in Bitcoin. Choose your denomination of currency: pounds, yuan, yen, Bitcoin, Ethereum. Still going to have to play that shit cyclically, like an FX portfolio. But you still need your income. You need to own business. What's the point of all this if you don't own business? So pick your business. Pick your business. I own plenty of businesses besides Curve. And I define them as businesses. You can report them as businesses, business income, and you could structure it all as a business. Just as the interesting thing is, if I talk to a real estate investor, it'd be a very, very common terminology. It's very much the same thing. You're talking about equity, you're talking about collateral, you're talking about yield, APR, so on and so forth. Very similar terminology because it all reduces to the same thing. Everything reduces to an ROI. If you buy a business, how long does it take to recoup your investment? If you buy a house, how long does it take to recoup your investment from rental income? Okay, so that's where APR comes into the picture. And my opinion is, from an investor standpoint, you probably want, 5-year ROI. 5-year ROI simply translates to 20% APR. 5% APR is pretty shitty. It's 20-year ROI. It takes you 20 years to make your money back. That's a pretty shitty investment. So we're entering a world where you got to get paid for investing. And I think that's going to become more prevalent. I've been talking for a long time that the concept of investing is going to change. Most people refer to the 2010s when they think of investing because it's a large population, the kids, and they're used to the zero interest rate policy where there was no such thing as investing. It was just degeneracy. And it's the same thing in crypto markets with the meme coins. It's just buy a token, it goes up in price, and they don't even understand why it goes up in price. But I think that's going to change more and more as time goes on. And we're going to start to see people looking for yield, people looking for a return on investment. They want to own something, and that's meaningful, not money and appreciation, capital gains. That's like warrior shit, player versus player. Not here for player versus player bullshit. I'm here for owning things. Build a portfolio, build a business that owns things, and that's meaningful. Then you have good stories to tell. Sit down at the dinner table with parents and grandparents, and you own all these bullshit meme coins. What kind of stories could you tell? But if you sit down and say, I own 3, 4, 5 businesses that are producing X amount of dollars on a weekly basis, that's a hell of a story. And that means something. Shishka's in the house, Kazika. Let's get rational. Much pleasure. Crypto Mass here. Man, I had to sell some to have some cash on the side just in case. That's the nature of business. When you work and you get a paycheck on a Friday, do you invest all of it? Or do you save some cash because you need some liquidity? See how all the terminologies overlap when you're talking about work, or you're talking about crypto, or you're talking about house rentals and Airbnbs. It's all the same thing. Need cash so you could actually live. Why? Because you got to pay for things, whether you want to buy things at a Best Buy, a piece of technology, a cell phone, whether you want to pay a bill or you want to buy things in the crypto markets, a token that represents a business. It's the same thing. You need cash to be able to do it. And the interesting thing is what you denominate your cash in. And I've said for quite some time, I denominate in Bitcoin, Ethereum, and dollars. You don't need to denominate in foreign currencies anymore. And that's going to be an interesting thing 10, 20 years down the line, how that plays out. Now that dollars could potentially expand significantly and really crowd out foreign currencies in a meaningful way, that could be a very interesting thing to see play out over the next 4, 8, 12 years. Dollars are just so easy to access. Pick a stablecoin, print a stablecoin, print a dollar. That's what the euro dollar market's been doing for the last 70 years, since the 1950s. Use collateral, print a dollar. And now we're dealing with businesses that print dollars better than the way banks have done over the last 70 plus years. And that's why we talk about CRVUSD. That's why we talk about MIM, Abracadabra, and pick your favorite stablecoin. Not a bank liability stablecoin, not a Tether or a USDC, but a pure native crypto stablecoin, a CDP, a collateralized deposition, where that collateral is managed by contracts, immutable and deterministic. And that's powerful because they will exist into the future no matter what. Immutable contracts are what change everything. One of the most key attributes of a protocol to look for is the immutability of contracts, not just from a risk mitigation perspective. Yeah, in good part from a risk mitigation perspective, because as you mitigate that risk, the protocol is just going to continue to exist into the future. It will see the next cycle in 2028, 29, heading into 30. It will see the cycle after that in 2033, 34, or whatever the hell the cycle is. And it will see the cycle after that. Because you can't turn it off. The contracts will exist in perpetuity. Snokes in the house from Europe. Much pleasure. Sergio, why isn't the stream at 1080p? I don't know. I'm on StreamYard. I apologize. I may not have optimized everything just yet, but I think it's going to be effective because we also go out to X now. And I think this will be nice for our users that are interested in doing a little bit better in these markets. Captain, did you have a chance to check out Token Bryce's latest post regarding VE33 versus Curve and the misalignment between incentives? Yeah, Token Bryce is lovely, very smart, and Liquidity and the new version are big tech. I'm not too fond of the redemption model. I'm much more fond of the llama. There's going to be plenty of redemption-based stablecoins, and I'm sure they'll work just fine into the future. But I think the llama, which with its smooth liquidation and deliquidation concept, I don't think there's much that compares to that. Well, what is InstaDApp? They have their new protocol that has a smooth liquidation. I forget the name of it. It's InstaDApp's new lending protocol. And INSD has done very well because of it. Yeah, INST. Yeah, INST, InstaDApp has done very well. I mean, look at those multiples, 80 cents to 3. You talk about 400+%. So I think the llama is, well, then again, that's from a stablecoin perspective. He's talking about V33. Okay. So the original tokenomics from Curve was literally the first voter escrow tokenomics. So of course, anything that is released after that is going to be iterative, based on precedence, based on learning from experience. There is a degree of correctness to what he's saying, and that's fine. I think there's the VE33 models that Andre conceptualized when original Solidly was launched. Let's not rehash that episode. Was an improvement, a big improvement. And I was very excited when Andre was originally talking about the design in document form. But that doesn't mean much with regard to Curve's moat. History is filled time and time again with inferior yet still effective and functional technologies not being supplanted by better, more advanced technology. And nothing rings true like VHS and Betamax. Betamax was better in all regards, smaller, more compact, more recording time. Yet VHS was already distributing and it had its momentum, and VHS became the norm. There's countless examples of Microsoft has never, ever been disrupted by Apple. I think I mentioned this reality quite often. Everyone thinks Apple is as big as it gets, but Microsoft owns business. Apple was never able to disrupt Microsoft in what Microsoft owned, which was business. So they took them out of the margins with regard to with the phone business, but the core business, nope. So humanity is funny like that. Humanity grows accustomed and gets attached, and they protect what's entrenched, the status quo. So what is in the lead, more often than not, remains in the lead, and the moat just gets stronger and stronger over time. So Gazika, he's right in his assessment. From a technological perspective, he comes up short with regard to a societal, a historical, and a realistic inspection of how these businesses play out. These businesses that have products and services. It was first, and it should continue to be in the lead with regard to its moat, especially as stuff like Napier comes online and whatever the hell else is coming online to suck circulating supply. Was it AWA? AWA is really interesting. I have it somewhere. AWA? Yeah, this is really cool. When I saw this, I was like, now we're talking. It's literally using Curve LP liquidity it's much like Stargate on top of layer 0, where the liquidity is from Curve pools. And I mean, literally where's the diagram? Sorry. Where's the picture? Where's the picture? They had a great picture of how it worked. And I was like, I mean, it's literally what layers, that's what they're all going to build. It's basically contracts on multiple chains And those contracts ensure finality. Do something here on one chain, and it's confirmed on the other chain using multiple parties for that validation, for that finality. And then you're able to basically swap cross chain as long as you have the liquidity on both chains. And that's exactly what Stargate facilitated. That's what Stargate still does facilitate very well. Um, very interesting. I believe this just further strengthens the moat. And that's the concept of the federation that we've discussed over the years. The more and more protocols that come online to strengthen the moat incentivize and encourage more and more protocols that come online to strengthen the moat recursively. And that's why what is in the lead remains in the lead. It's just a historic reality. Maybe because you were streaming in Twitter too? Yeah, probably, Snow, probably. MN, I bought Curve at under 46 cents, stopped and waited for a discounted price. It never happened. What does one do with a bag not big enough to earn a meaningful cash flow? Probably wasn't the place to allocate capital. Um, the whole point of Curve is cash flow. I mean, in theory, you could probably get some multiples when all this irrational exuberance is over, but it's not going to be the multiples that almost any other protocol offers. I wouldn't be surprised if we barely get past all-time high. I would be very satisfied with the price point of this asset, literally doing something like this and check back in, longer than this, because I would look back in 29 and then like 32. Um, but this is the type of pattern that we've seen historically. Take a peek at Atom. It's barely above previous highs back here in 2020, let's say about 2019, irrational exuberance, and we're barely above it. So if we extend somewhat of a similar pattern to Curve, you get something like that. You barely get back to all-time highs, so maybe $7. You get a 10x on the money. So MN, you consider that from a portfolio structure perspective, an opportunity cost perspective. If a 10x is what you're looking for, all right. So then this is something that is possible. I think these are reasonable expectations. What's most important is reasonable expectations. But bear in mind, if you bought like $1,000 worth of Curve and you're going to get a 10x, and at the end of 2024 or wherever the top of the market is, you got 10 grand, and everyone is expecting like crazy appreciation in crypto markets. 10x is often opportunity cost and underperformance. But if that's your expectation, then that's reasonable. That's the hardest thing to do in crypto markets, is to set your expectations as reasonable. Everyone's looking to turn $100 into millions of dollars, or $1,000 into millions of dollars. And those are most often than not unreasonable expectations. Food for thought. Good morning, Incumer. What's happening? Athletic Concept in the house. Rupert, much a pleasure. Solana's ripping. Solana way above structural breakout of the short-lived symmetrical triangle that it was forming. That's interesting. It's the three that I'm most interested in. Obviously, Bitcoin, Ethereum, Solana. And it's always different. Sure, the cyclicality and history will repeat with regard to irrational exuberance. That will never change. But what's so different is the most interesting. The flows, the passive flows into Bitcoin are very different. It is different this time. Ethereum is deflationary. It is different this time. Solana has stability. The network is working. It's looking to do everything that everyone expected of it. The ridiculously cheap transaction fees and the ridiculously high throughput, and the eye of financial institutions for infrastructure utilization, perp exchanges, so on and so forth. You could literally at some point run NASDAQ on Solana. So it is very different this time. So the question in my mind, what outperforms? And I think from a cash management perspective, so you get your income from your investments and you're denominating in what? There is actually a great reason to think Bitcoin could do some weird things. We'll only know in hindsight what all this stuff does, but the passive flows of Bitcoin change everything. How many trillions of dollars of boomer money could flow into Bitcoin if they wanted to? So it's possible. And then Ethereum is deflationary, and that's just weird. That's crazy from a unit of account standpoint, and it certainly is a unit of account in the Ethereum market, in the Ethereum merging market. And Solana, it surely has solidified itself as the first mover of the 2024 bull market. Way up over a 10x on its lows. I mean, what is it, 15x at this point? I mean, its lows were $8. Remarkable. 15x on the money. You know what happens with me? I feel most comfortable in Ethereum from a cash perspective. It's where my cash belongs. So Solana, I don't have exposure to Solana, but I have exposure to Solana beta. If Solana does everything that people think it will do from a Solana price actions standpoint, the SOL token, the gas token, imagine what the volume of transaction activity are going to be like on the Solana network. And then imagine the perp exchanges and all of that. And then what's the only thing that comes to mind is Hero Network, because everything's going to want to be building using it because of what it's doing from a federation standpoint. So I have full exposure to Solana and the position size that I need without actually having to own any SOL. That is a great way to structure a portfolio. You could have so much exposure to things indirectly. Now, clearly, if you have Bitcoin, you have exposure to all of this crypto market activity, but you also have to be cognizant of opportunity cost in consideration of your expectations. So, Ethereum, man, touched 4,000 this morning, and Bitcoin was over 70. Wild. I'm still stoked about what has occurred on Cosmos hubs so far this year. Where's the mention at? Dimension over $6. It's a lot of seed round capital that's been exiting. Every time it gets up to $7, $8, those boys are slamming their exit, and they're getting their 50x, their 100x on the money. And TIA as well. It cannot get back above 17. It topped at around 20 and change. But it's just remarkable what they've done. Back in 2020 and 2021, Atom, nobody talked about it at all. It was off the radar. Nobody talked about this shit. And then Osmo did its drop, and it has done well, and it's really the center of liquidity. And what did we just talk about earlier in the stream about shit that's in the lead remaining in the lead? So Osmo has that entrenchment. I mean, a lot of this stuff is Iris. That's literally a Cosmos hub, and that's done very well. The 1.2 cents at 3.9, it's up a couple 100%. For me, these expectations are quite reasonable. This chart looks lovely. Look at these. This is this price action. This did not occur in 2020 and 2021 for anything on the Cosmos hubs. This is all brand new behavior. AVAX hasn't been talked about much. It had a big run, big repricing back to what seems to be appropriate considering the scale and scope of its network, but it hasn't had the flair of what's occurring on the other networks. Polygon as well. Phantom and its Sonic narrative is a big deal. It's been repriced a lot lately, but look at the time weighted average prices on the monthly. That's the most important thing of where we are in the cycle. The cycle's just starting. It could easily have big mean regressions, but this is going to get very interesting in the next 3 to 6 months. So just remember premiums and discounts. For instance, let's look at Phantom. Phantom repricing very nicely. Could easily have a mean regression to 40 cents. and then the bounce, and then and then the breakout, and then the retest and the high. And notice the time weighted average price. I mean, seriously, that looks gorgeous. And that also means a 50% crash from the price of where we are. This chart would look lovely in hindsight from like a Q4 of 24, like October, November, December. It would look lovely if this is the way it played out. And that's coming off the heels of a 50% crash in price. So everything's at a premium. The base case, the expectation needs to be the depreciation, the crash, because then you will always win. You're expecting it to crash. All right, it's down 20%, down 30%, and it doesn't. And then it doesn't crash. And then you're excited because it didn't do what you were expecting it to do. So the expectation needs to be down. And then when it doesn't go down, you're excited. And that's how you protect capital. And that's going to be very important heading into Q4 of this year. We'll get a better sense of where the hell things are heading in 2025. We'll be very eyes on the DXY, the move indicator, national financial conditions, very important indicators, NFCI. Wow, actually, that's quite interesting. Take a look at this real quick as we come to the end of the stream. Plus 1.6% is relatively marginal, but change starts at the margins. If we see a lower low, I don't want to look at the moving averages on this. This is an indicator from the Chicago Fed, but conditions have tightened a little bit. Doesn't mean much, but if you see a big dip to the downside, minus 0.52, you're going to see some interesting price action in risk assets, especially in these crypto markets. Where's the Fed indicator at? Fed liquidity up. It's probably from the RRP continuing to drain. Treasury general account isn't really on the radar right now. As they taper QT at some point, that's going to be interesting. That'll play an interesting role in how overall Fed concept of liquidity affects the markets. But I'm mostly interested in what's coming out of Treasury this year. This is the chart to really look at if you want to try and front run exuberance as well as the top. You want to look at the move indicator. At some point, this thing needs to roll over. If you see a big dip to 80, you're talking a forward-looking indicator of something seriously playing out. You head into like June, July after they print like 4 or 5 trill out of Treasury, and the move indicator falls to 80. You literally have the perfect conditions for a significant increase in money supply on the planet. This is the way it works. It's the way money works. That's the way the global financial system works. So we certainly still keep our eyes on the way the global financial system is playing out, the plumbing of the system, just as much as we look at Bitcoin hovering at all-time highs. Last couple of questions, and we'll wrap it up for today. What beta do you have on Solana? No, not Jupe, Hero. Jupe is, I don't even know what it is. It was just, it's not like it's playing a role. It's just a meme coin at this point. There's no cash flow. It has no significance from a business perspective. I mean, quite often, look at DYDX. They use their token. People have to buy their token for a discount. Well, you have 10,000 of them, you get a 10%, 15, 20% discount on trades. Like Paraswap did that for quite a while. I think they're pivoting though. But Jupe isn't even doing that. Certainly not beta on Solana. But Hero is my exposure to the Solana network. Cap DeFi advisors in the house. What's up? What's up? Wow, these numbers. Yeah, we got some folks that want to do better in these markets and not necessarily get into a frenzy of exuberance, chasing meme coin after meme coin and watching those meme coins roll over. Albeit it's really interesting to watch. My eyes are on Fraxel. Fraxel, I think, is a very big network. I think it's just starting, and we haven't seen the percentage signs that I expect to see. RWA taking a dip. big dip. It's a meme coin. I don't really like to participate in the memes. That's a big volume change, sell side. You could easily see continuation to the downside. I don't care if it was airdrop to BEFXS holders, and those are the lock whores of the lock whores, the people with the longest time horizon in the entire space, aside from VE curve holders. It doesn't matter because a meme coin is liquid and you could sell it permissionlessly. So I don't trust any of it. I'm very interested in RA. RA is from the Ramses team on Arbitrum, and this is something I want. I want exposure to the capacity for this foreign exchange platform to finance using their VE33 system of activity, financial activity, and it's played out very well on Arbitrum. So Frax is the speculative ecosystem that I appreciate the most heading into this bull market because of my close alignment and appreciation for what Frax has done over the years, and I have a high opinion of everything start to finish of what they built. So this is the spec interest. Plenty of exposure to Cosmos. Continue to have some exposure to Polkadot ecosystem, but I don't think you really have to check in on Polkadot until 28, 29, and the bottom of next cycle to see where that's heading if you want to adjust those positions. As for this cycle, the liquidity still very much points to two networks to pay most attention to. Arbitrum, Jesus, 2.472, remarkable, 2.472 and 2.45 billion dollars on Solana and Arbitrum. Anyone who ever says, look at the TVL, total value locked, they're amateur. Look at the stable coins. It's all about the dollars. It always was. It always will be until that story changes. And that story is not changing right now. And I don't even see a time horizon where that story is changing, not even on the horizon right now. Arbitrum, Solana have the most liquidity in the entire L2 space, aside from Tron. BSC is big as well. I just basically have ignored Binance Smart Chain since launch, and I probably have done that to my peril, or to that probably is a detriment, but it is what it is. I ignore it. Solana, Arbitrum, and Fractal heading into the next couple months. Optimism is trailing significantly, 672, along with base at 236. These are tiny markets, and there'll be the least opportunity. The most opportunity will always be where the most money is, and money is dollars. Currency is dollars. Anyway, don't get me started on the money versus currency story. We'll save that for another macro conversation. Education is key, and you have taught us a different way to think about money, cash flow, currency, FX markets. Thank you, sir. Very welcome, Athletic Concept. We've been doing this for years at this point, and I appreciate all of you. If it wasn't for all of you listening to my stories, I wouldn't understand these things as I do. A million it is certainly Cosmos season. We love it and well deserved. We have suffered for 3 years, but now we finally eat. So Cosmos is interesting. There's a tremendous amount of activity as a result of airdrops, which means there's a fair amount of TVL. Stablecoins are another story. It's relatively light on stablecoins. So still be cautious. So I have a high opinion of Cosmos. I've had exposure since 2019 when Atom launched, and but it is not where the most financial activity will occur. Now I'm very interested. I have the dimension. It's all stake. Everything I have on Cosmos is stake. So it's literally just getting drop, 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 drop. So you just recycle those things and just accumulate. And you're going to see the best performance in these micro emerging markets, stuff like base, optimism, Cosmos hubs, next cycle. That's where you're going to see it. But as of right now, this cycle, Arbitrum and Solana are the ones that are screaming. They're the ones that are screaming where the outperformance will be. Do you not allow us to share links in the chat? I don't have any restrictions on, but if you have any final comments, Bill, I'm happy to address them. What do you think about using UniV3 pools as a way to automate DCA in and out? Well, that works. You might as well just use cow swap and the TWAP. I mean, this is the best way to interact with Ethereum mainnet. I don't even think it's comparable in any regards to think about anything else. This is if you're on Ethereum mainnet and trying to do anything, this is how you do it. This has got to be the best swapping protocol. It's gasless. You're doing everything with signatures, and obviously it's your slippage and your gases are going to be embedded in prices, so you'll see that. But this is by far the best way to interact with Ethereum mainnet. I don't even think there's really a conversation or argument that can be had to say otherwise. Hope that helps. Okay, Friday. Let's see what Bitcoin does the rest of the day. I look at these markets all day. I'll be on Twitter. You know the deal. 12:21 p.m. on a March 8th. Tell everyone to subscribe, because as the market gets into a bit of a frenzy, got to keep your head on straight. Got to keep a level head, and we can only do that if we think about these markets a little bit differently. I will see you guys after a nice weekend. Enjoy. Be safe. And you know the deal. Link in the description for the most rational community in the entire crypto space. Have a good one, guys. Peace.